Dividend paying stocks and other instruments that pay a nice yield are currently very much sought after, as they usually are, by many investors. And we're seeing this. We're seeing lots of people that have portfolios chock full of dividend stocks. So I just want to make a couple of points here. When you look at dividend stocks, there is always a risk. These are not stocks that are only going to go up. Some of them that are more reasonable in terms of their sustainability of the dividends, like Procter & Gamble currently as we speak has a roughly 2.5% or so dividend yield. And just a couple of points here about that. So if you find yourself with a portfolio of a lot of dividend stocks, nothing wrong with that per se, but one needs to be aware of some of the risk. And I think right now a lot of people are not really wanting to listen to those risks. First of all, you can have a situation where a stock, let's say in this case Procter & Gamble, would go down. If it goes down, in this case the stock went down, in this particular instance, just for illustration purposes, went down about 25%, paying a 2.5% yield. So the protection of that stock from the dividend is stops about up here. And a lot of people might say, oh, I don't care if the stock drops, it'll ultimately rebound. That might be true for Procter & Gamble, although it may not rebound for years. That may not hold true for many other stocks. And so one thing that we're seeing is that people feel comfortable receiving the interest and don't care so much about the potential for the stock to recover. But there's another thing that I think is something that's dramatically underestimated. And that has to do with dividends being cut. Now, there are certain stocks that have been paying dividends for 20, 25 years, those are the dividend aristocrats, but there are a lot of investors out there, and we're seeing this, are going after stocks that have dividends that are quite frankly too good to be true. And even if they're not extraordinarily too good to be true, even if those dividends get adjusted, meaning cut a little bit, those stocks could completely fall apart. So I just want to make this point. If you find yourself with a portfolio with dividend stocks, there are risks to consider that I think a lot of people right now are not considering, which is why it's so important to respect the trends in a stock regardless. And that's our topic this week. We're going to use our Market Rover software to find strong trends. We'll show you what it takes to find a strong trend, how to get out when a trend ends, and dividend investors or not, understanding whether a stock or an ETF or a sector or something is trending will matter. So the dividend's not going to protect anyone from that trend not changing. It's just a question is how badly does the trend change? So for dividend investors and others, understanding what a trend is, be that a trader or an investor, is important. We'll show you exactly how we like to look at trends, when they start, when they end, with our Market Rover. To find out more about that and how you can join that presentation completely free, check out the link down below or on the next screen, and we'll see you there.